Hello everybody, how are we doing today? So today we're going to be taking a look at Facebook or Meta Platforms. They just released their Q1 earnings and the stock is up about 18.5% after hours. Ended the session at 174.95, actually down 3.32%, and as you guys can see is up nearly 20, and I'm not gonna lie, I'm a little surprised by that. I own about 7 shares of Facebook myself, and I just didn't see. Well, here, we'll take a look at it. We'll take a look. So, I did write some notes. So, they ended up missing on their revenue by about 300 million, and they ended up beating on their earnings. Expected 2.51 EPS, and actually came through with 2.72. Some of that is due to the fact that they have been rapidly repurchasing shares. They actually bought back $9.5 billion worth of shares within the most recent quarter. Now, the thing with this company that I've really seen, and I kind of noticed since I've gotten into it, because unfortunately, I bought into this company right about, man, I want to say I bought in around this right here, 301. I bought, I want to say 5 shares at 301, and then obviously it's tanked, and I kind of bought, I believe, an extra 2 shares right here at 187, and obviously is at 174 today, and I would be happy buying shares at 174. I think that's a good price. Back up to 207. I really don't think these levels are going to stay. I mean, they could. Market's been super volatile. Lots of stuff going on right now around the world, and any stock is pretty much getting crushed. I mean, great company. I wouldn't be surprised to see Apple come down. I own 12 shares of Apple. I wouldn't be surprised to see Apple come down. I wouldn't be surprised to see anything come down anymore. I mean, you've seen what's happened to PayPal. You've seen what's happened to Netflix. And over here at Facebook, I was just expecting. I was definitely expecting, similar revenues to what they put out there. So what you had here was your total revenue did increase by 7% over year, which is very low growth rate for Facebook. You're typically looking in the mid-teen to upper teen levels when you look at Facebook's revenue growth. And they did guide this year that it was going to be much lower. Which is part of the reason why the first huge sell-off, down from like 330 to, the 200 or so levels we're kind of trading at now. A lot of people don't want to be in this company at a 7% growth rate, which I am with them. I agree. I don't want to be in this company at a 7% growth rate. I'm very bullish on the future of this company. The thing that I don't like about this company right now, and why a lot of other people have, why you're seeing this company trade where it is due to this 31% total cost and expenses growth. That's not what you want to see. When you're growing your revenue at 7% and you're growing what it costs you to produce that revenue by 31%, that means that your net income is not gonna reflect that. And here you go. You're down 21% on your net income that you produced this year from last Q1. And obviously you also see that in your income from operations decreasing by 25%. But the thing that is nice, and what I tend to look at companies nowadays, and I didn't know even up to about a month ago, I'm really fairly new into getting into this stuff, is well, obviously blah 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 with all Facebook, we all know that they're we all know about their family of apps. But what I do like about them is your cash flows. Okay, so obviously you see your net income dropped, down from 9.5 to 7.5. However, you looked at your net cash provided by operating activities, essentially your free cash flow, you're looking at 12,242 up to 14,076. So you are growing your free cash flow even though you are decreasing your net income. And I tend to look at that from a free cash flow perspective because when I'm valuing a company, I want to know what they're going to be bringing. The cash flow is great. It's, they can use it to pay dividends. They use it to buy shares back. They can use it for anything. But most of the time you want to see that return to the shareholder in some level. And Facebook has been doing that primarily through share buybacks. They have a huge share repurchase plan right now, and it's good. It's good. I would say buying shares back isn't always good. I would say that right now for a company like Facebook to kind of support these levels of about 174, 200, if they could step in here and buy some cheap shares, I wouldn't want to see a company that, up here and you're buying shares, you want to buy the dips, if you're a company doing repurchases, you'd want to buy here, you'd want to buy here. Like right now is a perfect time to buy some shares back. Truly. And when you look at the company on the balance sheet, the balance sheet income statement is truly incredible what they're doing over here at Facebook. And I do not have updated revenues, unfortunately, but I do have numbers written down. Just simple ratios that you look for in a company, that I look for in a company. You're trading about 15.21 PE ratio, 13.8 earnings per share in the trailing 12 months. I guess this was actually before the earnings. I did write these numbers down, so they're not as accurate. However, your current ratio is super high for a company at about 3.15. So that means basically that's if they were to have to pay off all their liabilities in, if they needed to pay off all their liabilities right now, they could do that over 3 times, which is great. Obviously, that's never going to happen, or that's something. The odds of that happening are very low, and your total debt ratio is about 20%, which is incredible. That means 80% of the companies financed through equity rather than debt. You don't want a company swamped with debt. That's not great. And your profit margin 33%, which is incredible. And last year they had $39 billion in free cash flow, which is a great number. 39 billion up from 23 billion. Like I said, that's the money. You see this repurchase of capital stock, $44 billion. That's a lot. That's a lot. Okay, and look for that to kind of support this stock. Now, I guess I'm just going to kind of talk for a little bit. I think that with Facebook, it's a company that I don't necessarily think is done. I think it's done. Done in terms of dropping. Because you're down from 380 is the highs, and you're all the way down to. We're just down to 174. Now you're back up to 207, but I don't necessarily think the company's done dropping. I think if you look over the past month, I think you see a pretty clear downtrend on this company. If you look over the past 6 months, similar story. This was your highs, so you've been kind of flat. There's been a lot of support around this 180, I'd say, even closer to 200 range, and you could even go as high to say, you could even go as high to say like 230 would be your highs of that trend where the stock's kind of holding and there's a lot of buyers in there. yeah, I mean, this company, I've really been taking a look at Google, because I do think that you see companies, for example, like you looked up, say you look up Procter and Gamble, you look at these P ratios, it's trading around 29 PE. Company, if you look at the financials, obviously this is what I love. You look at the free cash flow, you're looking at 11, 11, 14, 15. That's great. That's great. And that's very reliable. That's what they're going to bring. 11, 11, 14, 15. They're growing these free cash flows, which is incredible. And then you want to look at a company um, like um, Walmart. Walmart's trading at a 31 right now. And your cash flow is 17, 14, 25, 11. So they're kind of all over the place. They have a wide range. But the companies, you're going to you're seeing kind of a shift in these high growth tech companies. Obviously, Apple is kind of an exception right now, which is why I think they have a possibility to drop, because you're seeing this with the 2603, and especially when you're looking at companies, like I said, like Facebook. When you're trading at a 12, which you're not really trading at a 12, it's kind of skewed numbers. It's probably a little bit higher than that, probably maybe closer to a 15 to 18 range, due to the fact that you want to look at your projected revenue for the for the future year. I know this is the trailing 12 months PE, but the company is projecting less revenue than they were prior, due to the iOS updates that rolled out last year in Q2. But say you look at a company, Microsoft is probably still really high. You're about a 30. But these companies are dropping. Like, look at these. You're looking at, from 331 down to 285. Look at NVIDIA. Oh, that's not what I wanted to do. All right, look at NVIDIA. Crazy drop here. You're looking at, whatever that is, 300 down to 184. And then you want to look at Netflix. Netflix is insane. Netflix, 700 to 187, guys. This is a drop, guys. This is a drop. And it looks so bad if you look at it from this view, because it is really bad. But you're seeing these P's drop. The bulls are not in this market right now, guys. The bears are in this market, okay? The bears are in this market. You look at all the commodities, okay? The commodities, that's the word I'm looking for. Look at all the commodities, and these things are, look at this growth. From 83 to 102, and that's within 6 months. You look at the month, year to date. Like I said, you're going up. You have this huge from 2020, 18. Guys, $18. You were $18. And back in 2022, it's $102 a barrel. Look at corn. Is this the right one? I mean, guys, like I said, there's really nothing I could say. Look at PayPal. I mean, these huge companies, guys, and they were so massively overvalued. I mean, you name a company. Visa, I don't think is really on that level, but name a big tech company, and they're getting slammed. Even Google, even Google, guys, even Google is down from about 3,000 down to 23. So, I mean, look at this. It's a clear downtrend. So the bears are in this market right now, guys. If you're not, what I'm trying to do is I'm trying to figure out the companies that when they drop that I want to buy. I don't think it's done yet. I don't think Facebook's done dropping. I don't think Google's done. I'm looking forward to loading up on Google shares after the stock split. I'm hoping it keeps dropping. I love Google. Google has one of the cleanest, if not the cleanest, balance sheets in the whole entire stock market. Facebook has the cleanest, if not one of the cleanest, right there with Google. 1 and 2 right there. Balance sheet in the whole stock market. Some of the best free cash flows. I mean, these free cash flow numbers by Google, 22, 30, 42, up to $67 billion of free cash flow last year. Guys, if you can't handle the heat, get out of the kitchen, guys, because it is just this market. If you're going to sell your shares, if you're going to sell your Google shares because they went down from 3,000 down to 233, guys, you need this is your time. If you have conviction in these companies, you need to be buying them up, But just watch, just be careful. Do your research, guys. And one last thing I wanted to add was that I've been doing these free basically your future value of free cash flows analysis on these companies. It takes me about an hour to do these equations, and right now I have a value of about $175 a share for Facebook, which is smack dab right there. That's my quote unquote intrinsic value of the company after projecting these free cash flows for the next few years here, and then coming up with a terminal value, discounting all the cash flows, adding them up, dividing those by the shares outstanding. I mean, obviously the value, it could be a lot off, could be a lot on. The thing I don't really love about this is obviously it's super hard to predict free cash flows. If you could predict free cash flows, I mean, you would own any stock that you knew was gonna, have the best. But that's the value I have for the company right now. So today would have been a really good day to buy. However, I'm not convinced that it is done. But this is purely a company that's on my watch list, and this isn't financial advice. I would definitely encourage everyone to do their own research. You kind of get into these stocks. It's a good time to look at balance sheets and to analyze companies. And it's you kind of get in the rabbit hole. And there's a lot of stocks out there, guys. There is a lot of companies, but there's not many companies like Facebook. There's not many companies like Google, like Apple, like these massive companies. But yeah, so I'm gonna leave it at that. Everyone, have a great rest of your day.